Morning, good people. Um, as I sit here on this very day, on the 23rd of the month, I'm not here to instill my biases, just more how I explore the world and how I look at the tools that are out there. There's a huge craze at the moment about AI and how that can be able to enhance people's lives. From my perspective, I've explored the journey with it and I continue to. So I'll just take you through how I help how it helps me think at the moment. Okay, let's go. Okay, first, before we even get to that, my life involves looking at markets in general and that influences me on the other decisions that I make in life. So the market's my first point of call, and it inspires me to look at other things. So starting with that market, where are we on this market? The market is up 0.43 at the moment. US is up about 2, following on from another 2%, 2.5% yesterday. So it's generally risk on for the US market. Looking at the currencies, um, the currency is important for a South African investor, given that some of the earnings from the companies that we have in our exchange have foreign earnings. Some of the commodity companies have foreign earnings, so you need to convert them back to South African rands. And Richmond's another one of them that's influenced by foreign currencies. I mean, from a currency perspective, it's not just the US dollar that drives the revenue of those businesses. I mean, there's other currencies, but given the US reserve currency, it's important to compare it against that. As you can see here, the dollar continues to weaken. You've seen the dollar weaken, really, that's what I want to say. But anyways, just looking at the summary of the market, how I've looked at the market is I've just broken it down by resource stock versus South African stocks, which in where resource stocks are resource stocks. South African stocks is banks and insurers mostly. You can see generally the market is up. So that's a story. I mean, I utilize DeepSeek. I think that's probably the more powerful model. You're not supposed to put the prompt of hi there, but how would you go about deciphering market sentiment? For me, what's important is stock markets are more driven by sentiment in the time frame that I look at it. So the sentiment from one period to the other, as I showed you in the video that preceded this one, the flow of the river is important. Where you are in the point in the river is important. For a short-term guy, it's very important to know where you are in the market mechanism. So at the moment it's 11:30. You've seen the black swan open, you know. It is far beyond normality, the move today. The market's up quite significantly on some stock, but it's down significantly on the others, which just speaks to the current volatility that we're in. So for traders like myself, a volatile market is a good one. As long as your system doesn't buy things that have been overextended, that's the one risk. That's literally the only risk you need to guide against: crash risk. That's the biggest risk for momentum models like this one. Let's see what the model says. So it says that you need to look at various indicators. So sentiment from a trading perspective. So how can you get sentiment? The first tool is looking at financial news outlets, which as a retail investor is usually delayed. You can use natural processing tools. Some of them come at a cost. So just make sure you find credible sources. So you see social media forums. So Twitter is probably one of them. Reddit and stock tweets. APIs are quite good in getting some sentiment, volume of mentions. The one that I usually look at the most is technical indicators. So the first one is price action. So I think for prices, for what I look at, I tend to think that price and volume is the one variable that drives prices a lot. So any sign of that, any indicator of that, even though that data is manipulated, any indicator on that is the one that enables me to buy and sell. So price action from moving average, believe it or not, it sounds simple, but a moving average is probably the best thing you can have. It's like a 20-40 period one. Also RSIs, which are less dependable MACDs. Anyways, volume, rising volume is important. With price increase, it shows bullish sentiment. So if you can be able to gauge price action and volume, you're probably about 80 to 90% there, considering the 80-20 rule. There's other market specific indicators like the VIX. The VIX is obviously a delayed indicator. But for those that manage bigger funds, it's important to see where the level of VIX is and is it spiking or not. If it's steady, the low level, then you ought not to. You're likely to be stopped out most of the time. There also is a put call ratio. There's other sentiment indices, but that's more for long term investors or trying to have a macro model. And then in terms of fund flows can be gauged from volume, as far as I know. But here they're looking at the ETF or mutual fund data. That's usually quite delayed, so that's not helpful for a short-term investor. There's also behavioral finance. Yeah, this is just a generic term. I don't know how it helps here, but anyways, identify irrational exuberance, meme stocks. Yeah, you can look at that if that's the market you're looking at. But I think from the indicators I have, that's enough. Also, you can look at machine learning, train custom models to pass context of sarcasm. But you need to be processing a lot of data than that. There's also context analysis, cross-reference indicators. The other one is historical correlations, which is part of my models as well that I look at. It says how past sentiment aligned with the market movement. So you see, fellow people, the first one was price action, the second one was volume. For me, the third one is historical correlations. Composite indices, I think through correlation, I create composite indices that determine possible potential drivers of markets without identifying what the driver is. Okay, yeah, so then they go through examples here. I won't get into details, but I think just going through this alone, it's quite important. And it just gives you an idea of what AI can do, especially for fellow small time investors, who obviously won't have all the resources that one might want. I think the second one I look at is Grok, which is a pretty good indicator. Let's see which is a good platform to do this as well. Let's see what it says, just to see if we're talking shit or not. So let's see. So sentiment means you need to decipher moods, opinions, and behaviors of investors and traders towards a market asset or sector. A structured approach is analyzing price and volume, which is what I generally look at. As I said, price movements, you're looking at trends, whether they're moving averages or any other indicator, which indicates whether the sentiment is going up or down, bullish is up, or bearish, bear being down. Trading volume alongside price can confirm the strength of it. High volume in an uptrend reinforces bullishness. I know this is simple, but I'll re-emphasize how important it is. And the other one is volatility indicators like the VIX, even though it can be a bit delayed, but the absolute quantum of it is probably more important. And then the other source is monitoring news and media. Believe it or not, all price actions and volume movements and interrelations depend on news as well. Besides the fractions of the markets that happen intra-minute or whatever, news are quite important, and specific events like earnings calls or earnings announcements and any other news that will affect the stock. Earnings reports and economic data, that's exactly what they just mentioned there. And real-time search, the stocks are quite live. X platform is quite good. Obviously, there might be bias there. There's other sentiment tools like they mentioned on the other one. There's also forum activities like StockTwits, Reddit, and others. Technical indicators, moving averages, like I said. RSI can be a bit of a non-event. Put call ratio, it's almost like the VIX. Survey is a bit delayed as far as I'm concerned. The only relevant one here that might be of use for long-term investors is aggregate buy, sell, hold ratings from analysts. So essentially, firms like Investec and other firms utilize analyst sentiment quite a lot. So you can utilize that as if you are a trend follower, you're following analysts, pretty much that's what it is. And there's other cues as well. Watch for signs of FOMO or panic selling. It's very important to have that in mind, even though it's not as easy to measure. Extreme sentiment precedes reversal, so you must be careful of levels of sentiments that is too elevated because you're exposed to crash risk. I'll repeat, crash risk is the biggest thing that you need to minimize in this portfolio. For me, it's the biggest thing. It's the black swan almost. Crash risk is the biggest thing that I'm looking out for because otherwise, moving averages and things is almost like the flow of the river. Cross set analysis, I think I don't do a lot of these, especially amongst other asset classes. So I'd look to include this in my model. I think it's quite vital, especially looking at gold, the relationship with that and bonds. I think the historical correlations there or relationships fail quite a lot of the times, but it's important to have a sense of, say, crypto here. What they're saying is crypto, bonds, commodities, how's that interrelation, That's quite important. You can easily measure that. It's data that you can measure. There's also sector rotation, which is quite critical in my analysis at the moment. I think that's very important. Those are just examples. But the other thing you must always be careful about is noise and signal. So just like anything else in life, there could be quite a lot of noise. Yeah. Be careful of noise in reality. So your data can have a lot of noise. Your social media data can have a lot of noise. Again, some sentiment indicators like surveys, as I said, lack real-time data. So be careful of that. Also, be careful of being biased. There's also groupthink and media narratives, but that can play to your advantage if you are a trend follower. So be careful of crash risk there. So dichotomy of diversion from that to normality can cause crashes as well. So combining all of these indicators, volume, news, all of these can give you a robust picture of market sentiment. So for what we do, we are only just interested in gauging sentiment for stock in the most accurate and the most effective way, and also managing trading costs. I think that's quite a detailed look at the market at the moment. Without showing where my indicators are at the moment, I mean, I've already showed you where the market is. It's quite up, and it's in love with SA Inc. at the moment. But the one thing I'll say is